Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video, I'm going to go over 5 high growth companies that are cheap at the moment according to Seeking Alpha. But before we do that, I just want to talk about a couple of things that's been happening in the in generally in the market. What you see right now in front of you, this is my portfolio. So just for the week, we started £95,627 and we ended £96,000, £449. I've added £500 just the last couple of days, but some of this money is actually came from because the market, some of the companies that I own actually went up a little bit. Now it's the mixed when it comes to this portfolio. Okay, I try to have basically dividend paying companies from different sectors. So every single stock here pays a dividend right now. Okay, apart from of course this ETF here, and what I'm trying to do here is kind of have a diversified portfolio, and inshallah that I can just live off in the long run, that pays me some sort of income. But right now some of these companies are becoming a little bit overvalued. So what I would like to show you first is the fear and greed. This is one of the ways to know what is happening in the market. Right now, we are going back to the way things were in 2020 and 2021, where the extreme greed was basically evident. It was evident in every single trade, every single day, stocks were going up and up and up for no apparent reason. Every single analyst, bank, whatever, investment companies were coming out and saying, so stock like Tesla, for example, they increased the price target for the next 12 months by another 5%, by another 10%, and there was no reason. They were trying to find justification just to be, one comes out with something, the other one comes back and says, no, we've changed the hours now. Ours is now 20% upside from where it is. Oh no, it's 30% from upside where. And that's exactly what is happening. If you look at the market right now, if you look at the Eli Lilly's and basically Nvidia's change in the last couple of, just forget months, just look at just last 30 days or 20 days, you'll see there's so many analysts coming out and just saying, nope, this stock should be now 800. No, this stock should be now 700. And this one is now being moved from 700 something to almost to 1200 basically, $1,200. So, and a lot of it is because they say, yeah, the growth is there, this company, yeah, because of the weight loss and all the things that they do in terms of diabetes and stuff like that, they are going to the moon. Now, this is why you really need to be careful, because now we are here, everybody else is just gonna feel like left out and start buying high growth stocks that are actually really genuinely expensive to buy. And then it's exactly what if we go back to what happened in 2022, where stocks were down, especially the technology companies, and at the time it was the what carried the market at that point was the energy companies, because technology companies did not do well and everyone was selling at that point. So you really have to be careful and be mindful of what you're buying and how much you're paying for it, because some of these companies are ridiculously expensive. What I would like to do today is share with you guys 5 companies that I come across, using Seeking Alpha, that seem trading slightly now cheaper than their intrinsic value. So I'm going to share that with you guys. Again, this is not financial advice. So if you're interested in any of these businesses in the long run, please go and do your research, find out a bit more information about the companies and what they do and so on. So just don't take my word for it. And the first company we're going to look at today is Ulta Beauty. This is one of the companies that sells a lot of products that are, for makeup and things like that. It has a market cap of $25 billion. So it's not really a huge company, $25 billion US. Economic mode right now is narrow price. It has $532 per share. EPS right now $24.64. So they are profitable business. PE is about 21.6. Okay, forward PE of 20 and price to the PEG ratio of 2. Normally what we're looking for is below 1, and if you can get that, is absolutely wonderful, but between 1 and 2 is kind of okay. Profit margin we're looking at right now 11%, return on equity of 62%, return on invested capital about 38%, and current ratio, which tells us if this company has enough liquid assets to basically pay off any debt that they have or any liabilities for the next 12 months. Normally what we're looking for is anything above 1, so right now it's 1.52. Free cash flow of 847 million. Return on equity, total return the last 10 years, we're looking about 19%. Growth estimate next year is 5.7, and then growth estimate for the next 5 years 7%. Seeking Alpha says is about 2% upside from where we are now. $545 per share is where they think the price should be. The next company is AutoZone. This one has 49.2 billion market cap. It has a narrow economic moat, $2,727 per share right now. EPS of $138. PE right now 19, and forward PE about 19 as well, so not much of a difference. PEG ratio just below 2, which is absolutely fine. Profit margin 14%. Return on equity, I think they have a negative equity situation going on there. Return on invested capital 49%. Current ratio is below 1, so that means they might not be able to cover, but they do have a free in terms of liquid assets. They can liquidate their assets basically in the next 12 months, but they do have free cash flow of $2 billion, so they should be fine. Total return the last 10 years, we're looking about 8%. Growth estimate for the next year, we're looking about 9%. Then 9% after that every single year. 8.66% is basically where they basically upside from where we are now. $2,964 per share is where they think the price should be. Right, if you haven't liked the video already, please do so. It really helps the channel, and also, like I've always said to you guys, it will be really helpful if you can join us on the in the Patreon account, where you get access to all of these things, okay, and all the buys and sales that are making, all the ETF trackers and so on. So that will be really helpful if you can do that. The next company that we're looking at is Adobe. Adobe has 278 billion market cap. This is one of the companies that benefited from the whole situation with AI, because they do have something called Firefly, which is basically you can give commands to different images and it completely changes the background and things like that. So they're using AI now, generative AI, to actually better their product, which is quite nice. And the deal with Figma is also now gone out the window, which is quite nice. So current price is $546 per share. EPS of 11.83. PE right now 46, which seems very high, but forward PE about 34 right now. Price to, in fact, it might be even cheaper because it has come down. Let me just double check. Yeah, forward PE is right now is 30. Okay, so it has come down a little bit because I think the stock is down. If we look at just this week, it's about 12%. I think they reported. I haven't checked that yet, so I need to double check what they've actually reported. In fact, we can have a quick look if they have reported. I think they reported yesterday or a day before, or maybe it was something for other reasons why the stock has done nothing just last couple of days. Okay, so it looks like they have reported, so I'll check that again. I'll let you know. But yeah, so right now in terms of the PEG ratio 2.29, profit margin 28%, return on equity 35%, and return on invested capital of 30%, which is 32%, which is quite nice. Current ratio above 1, $7.3 billion of free cash flow right now. Free cash flow is very important to companies because that's how they pay off their debt. They can actually reinvest in the business. They can pay any dividends. They could do a lot of things with that money. Okay, so it's very good for companies to have free cash flow, especially with the interest rates being so high. You don't want your companies going to the bank and getting high interest loans and so on. So total return the last 10 years, we're looking at about 26%. Growth estimate next year is about 13%. Growth estimate for the following 5 years is 14%. 18% upside from where we are now. $646 per share is where they think the price should be. Right now is in $546. So it's slightly cheaper, 18% for Adobe. That's not actually bad. This is one of the best companies out there when it comes to, of course, the type of software that basically creatives use. AMD is the next company, 276 market cap. This company has massively benefited. In fact, I don't even know how much is up. It must be up of closer to, I don't know, 40-50% since the beginning of the year. Oh, actually 20%. Still a lot. So for the 1 year, it's 117% up, which is absolutely ridiculous if you think about. Okay, but yeah, so currently $173 per share. EPS right now we're looking at just less than 50, about 53 cents. PE 330. That's ridiculous. PE, forward PE is 51, and PEG ratio below 1, which is amazing to see. Profit margin, this is the thing. So when you look at the PEG high growth companies, you always check the PEG ratio. The current PE is of course too expensive. If you just use PE on its own here, you will actually think I'm never going to touch this company. But when you look at the PEG ratio, okay, which is the price to earnings to growth, okay, so we're taking the growth side of things into consideration. So that means right now it seems very cheap. Profit margin of 3.77%, return on equity of 1.5, return on invested capital of 1%, current ratio 2.51, so nothing to worry about. $1.1 billion of free cash flow, 48% total return in the last 10 years. Growth estimate next year 52%, and then 25% after that. Hence why this company, basically people are saying it's cheap right now. Almost 10% upside from where we are now. $191 per share is where they think the price should be. A final company that we're going to look at is PDD Holdings. This is, I think, it's based in Ireland. They sell all types of product. Let me quickly show you. It's a holding company, so they have loads of different companies within that. So they have the e-commerce, they have agriculture, apparel, shoes, bags, and all of that stuff, and mother and children products. So they have loads of types of products. And as you can see here, have 171 billion market cap, narrow economic moat, $135 per share right now. PE is $4.30. EPS, sorry, $4.39. PE right now 30, forward PE of 16, PEG ratio below 1, profit margin 23%, return on equity 34%, and return on invested capital of 25%. Current ratio above 1, which is quite nice. $11.5 billion of free cash flow right now, 37% return in the last, I think this is the last 5 years. I don't think it is the last 10 years. So let's quickly double check this because I don't want to give you false information. So let's go to this company. Let's go to total return in the last whatever years. There we go, 5 years, not 10 years. Okay, so that's 5 years. Growth estimate for the next year is 29%, then 4% after that, 27%, almost 28% upside from where we are now. $173 per share is where they think the price should be. And in terms of Sharia compliance side of things, okay, there's no issues with this company. Okay. So if you have a look at that, the only one, AutoZone, is actually slightly interest-bearing debt. The rest of them should be fine. And this one, actually, interest-bearing securities is actually quite high. Normally, you just don't see that. It's the other way around. But interest-bearing securities is actually 27% for PDD Holdings. So there you have it. That's the 5 companies that I wanted to share with you guys today. You can pause the video and have a quick look. And one thing I want to say before we finish the video, if you have not liked the videos, please do it, because it really genuinely helps the channel. It motivates me to, of course, to keep going, and of course it reaches more brothers and sisters, so we can help a lot more our brothers and sisters out there. I've got a few more videos planned for this weekend. Inshallah, I will share that with you. Have a wonderful day. Assalamu Alaikum.